Good evening, Praveen sir.
Yeah, good evening, sir. Am I audible and visible?
Yes, sir. Kripa ma'am.
Hi, sir. Good evening,
Yes,
sir.
good
Praveen, sir.
evening. Can we
Good
start?
evening, ma'am.
Shall we start, sir?
Yes, ma'am. Please,
Yes,
ma'am. Please
ma'am.
go ahead.
Good evening to one and all present here. On behalf of Department of Management Studies, SJBIT, I extend my welcome to you all for this fifth day of workshop on financial statement analysis. With the blessings of Pooja Mahaswamiji, due respect from our principal, Dr. Puttiraju, and constant supporter of Department Head, Dr. Mamata J, I take this opportunity to welcome our today's speaker, Dr. Praveen Kumar Sinha. Sir, welcome you, sir.
Thank you, madam.
So, Dr. Praveen Kumar Sinha is Associate Professor from Dayanand Sagar Academy of Technology and has completed his master's in MBA and MCom and completed PhD from Bharati University and has completed 11 years of experience in academics. Sir also published 11 research papers in international journal, 7 in international conference and 7 in national conference. Sir also participated in many FCDs. Sir achievements are completed BEC Vantage course offered by British Council and participated in National Mathematics Olympiad contest and won a B-level certificate in International Journal for the research paper. Sir, welcome you for our workshop, sir. On behalf of
Thank you.
entire team, I welcome you, sir.
Thank you, madam. Thank you.
May I now I request our speaker to take the session. Over to you, sir.
Thank you, madam. Thank you. So very good evening to one and all present here. As such, you can say today is the 5th day of the FDP, and here in this case, the broad topic in this case is confining with the financial statement analysis and extending beyond the subject matter which has been given here. Today, I would be talking more about the fundamental analysis. I hope majority of you believe in making investments. I do believe. Yes. Am I audible to you? Am I audible, sir?
Reshma,
Sir, if you don't mind.
one second. I will remove, sir. I will remove the participant. Yes, sir. Now we can go ahead, sir. You are audible, sir. You are audible, sir.
Yeah, okay. Thank you, sir. So today, basically, going beyond the financial statement analysis, which is actually the part of the economic analysis, I would be talking more about investment. So any kind of investment which we see in the market, we can say we cannot just go and do the blind investments, because any kind of investment which you see, majority of the investment in this case is confining with the risk and return analysis. So the investment management is completely confining with the risk element, and simultaneously here in this case we talk about the return. So whenever we make an investment, we always think about how we are going to minimize the risk and we can maximize our output. We can maximize our return. So in the given connection in this case, what we do a defined analysis. So either any investor, if you think in the stock market, they may go with the EIC analysis, or they can go with the technical analysis. So whenever I say about economic analysis in this case, here in this case I am more talking about the fundamental analysis. And majority of, if you listen to many the trade analysts and trade analyst here in this case, the trade analysts, they focus mainly on the fundamental aspects. So you can say, when you say about the fundamental aspects for any company, or you can say that when you say about the fundamental aspects of you can say whenever we make an investment. So when you say about the fundamental aspects of any company, or if I say about the fundamental aspects of any stocks, okay, so choosing of an stocks, again, it's a big task. So here in this case, what we can do, we can think about how we can minimize the risk. So the best part in this case is that we can go ahead with making of the portfolio. So portfolio in this case, again, when you say about the portfolio, it is all about the choosing of the securities in the given portfolio, where the whole objective is all about minimizing the risk. So whenever we choose a company, here in this case, here what we basically do the fundamental and the technical analysis. Whenever we say about the fundamental analysis, here in this case, thinking of that, we are thinking more about the long-term investments. So any investors who is thinking of the long-term investment, they cannot rely just on the technical analysis. Okay. So here in this case, definitely the fundamental analysis is the key aspect confining with a given company. So our topic, our discussion is more confining with the fundamental analysis, and technical analysis we'll see later. So moment we say about the fundamental analysis, here in this case, the three broad categories of the fundamental analysis can be then called as EIC framework. So when we say about EIC framework, here in this case, it talks about economic analysis, it talks about industry analysis, it talks about the company analysis. So here basically what we see what can be the economic factor, what can be the industry specific factor, and what can be the company specific factor which is impacting the stocks prices. At the end, whenever we buy a stocks, what we want the wealth maximization of the given stock. So whenever I want the wealth maximization, definitely in this case I need to think in the long term perspective. So we think about the economic analysis, and you can see that moment we say about economic analysis, many macroeconomic environmental factors always come in picture. If I talk about the macroeconomic uh, specific factor, for example, if I say about the level of the GDP, the level of the growth in the economy, the you can say the level of inflation in the economy, then you can say if any changes is there in the monetary policy of the RBI, or you can say that any aspect, any key aspect which is impacting the economic framework, which is impacting the economic environment, definitely it will have its bearing on the performance of the company. We all know that we are being impacted by the COVID-19, and because of which you can say the level of output in the economy has come down, the level of job market has come down. But do you think that we all have expected that the stock market may not be performing in the given conditions? But even then, if you have analyzed that the stock market was well bouncing, and you can see that the level of the stock, the level of the major indices, if I talk about the BSC, or you can say if I talk about NSE, BSC, you can say it was trending upward, even though you can say the economy was, you can say it was in the severe grip of COVID. Now, why it was happening? See, it is all well connected. When we have seen that people have lost the job and they wanted to make a quick money, here in this case, majority of the small investors, what they have done in the last 6 months, they have started trading in the capital market. And because of which you can say there was the heavy inflow of fund in the stock market, and because of which you can see the indices, the stock prices, it has gone up. Many of the penny stocks, many of the penny stocks for which you can see we do not have any kind of profits. Those companies you can say whose stock prices is you can say less than 10, hardly 1, 2 like this. These are the penny stocks, and even you can say if the level of investment in these penny stocks suddenly it has jumped up, and the companies belonging to these penny stocks, suddenly you can find there you can see the prices is going up. Why? Because there was a severe heavy demand in the stock market. This has happened. Why this has happened? Why? Because the money which was about to be utilized in the economy, it was actually channelized in the stock market, and suddenly we can see that the stock market, even though we have the COVID-like situation in the economy, the stock market was booming up. Okay, so here in this case, sometimes we may feel that our activity, the economic, the company's activity actually drive the stock prices. But the stock prices, if you see, depends on the multiple factors. Sometimes confining with the economy, sometimes confining with the industry, and sometimes confining with the company, and sometimes you can say beyond the EIC framework. So as such, if I say about what would be the exact cause why we can see the prices has gone up, as such we cannot have any concrete answer. So anyway, we'll talk about the economic analysis. So when we say about the economic analysis here in this case, the variables which are quite significant in this case is the level of the export, the level of the price competitions, profits, exchange rate, the purchasing power, earnings. Okay, that is confining at the global level. Then we have the domestic economy. So when we say about the domestic economy, here in this case, we have the multiple variables like GDP or GNP, or you can see that the level of competitions in the market, the level of market, the types of market which we have, and many more, which we'll talk in the coming slides. So macroeconomic analysis. So when we say about the macroeconomic analysis and when we say about the global economic analysis, here in this case, the impact of COVID, we can find it is on the global, it is on the global level. So majority of the country, even though they are the part of WTO, they were, you can say, the signing member of the WTO. Here in this case, what we have seen that these economies suddenly what they have done, they have closed the economy for any kind of import, any kind of exports. Why they have done? Why? Because now it is not about money. It is all about the safety of the people, safety of, you can say, the economy. Because of this, you can say the level of export, the level of import, it was hugely impacted. The foreign exchange market, it was completely devastated. The purchasing power, as well as you can say the earning of many global economy who depends mainly on the export. Here in this case, suddenly the level of output has dropped, the level of activity has dropped, and you can see that there was the global chaos. So we can see, and even we have felt that the impact is visible on the profit. Even the impact was visible on the activity of the business. Many of the company in this case, in the beginning of the COVID, what they have done, they try to say that somehow they would be able to maintain the output what they have done. They should not affect the level of the employment. So here in this case, what they have done, they have started in the shift, then in a week, 2 days, and suddenly when they feel that the demand is totally negative, they do not have a choice. They have to lay off the employee, they have to lay off the labor, and suddenly we can say even there was the drop down in the stock prices. So all you can say whatever the event which is happening in the economy, you can say there is a direct bearing on the stock market as well as the stock prices. Then when we say about the domestic economy here in this case, why here in this case the people they make investment in the stocks are because their objective in this case is about to maximize the return. And when we say about the variables confining with the domestic economy here in this case, the key variable is the GDP. So when we say about the GDP here in this case, it actually measures the economy's total output of the goods and services manufactured in a given year. So whenever we say about the GDP, we have the many measures by which we can measure the level of GDP in an economy. And you can say maybe we employ the saving method, or maybe we employ the expenditure method, or whether we apply the the weighted average method. Whatever method we apply here in this case, the level of GDP is being measured. But suddenly you can say that all the economic activity may be confining with the buying and selling of the business unit, suddenly it has dropped down. And as such, you can say it has dropped down. Suddenly you can see the GDP has come down. I'll just say that before the impact of, you can see the COVID-19, the Indian economy, the pace of the GDP, it has slowed down early in the month of Jan and Feb. This was because of so many measures and the cuts which have been implemented by the government. So everyone was hopeful that maybe in the coming month the things will improve, but suddenly you can see that we had the impact and the GDP has further you can say it has trend down. And as such, the level of GDP has come down. So here in this case method I have said maybe confining with the income method or maybe confining with the expenditure. See, when we have the income, definitely in this case, you think about saving, and when you have the saving, you always think about the investment. So as the level of income has come down, so people here in this case, they started thinking, how can I save my money? So people does not have a choice here in this case, as the income was less. So what they have done, they have started incurring lesser expenditure. So the product, less product was sold in the market. Suddenly the demand has come down. Majority of the product remains unsold. Many of the contract which has been given, many of the contract which has been given for which you can say the demand was expected in the coming months, suddenly the contract was cancelled, and we can find that finally you can see we have seen that the level of GDP, it is coming downward. One time you can say the level of GDP, the level of GDP has come down even to the lower limit of 2.9 to 3 as compared to the same time in the last year. Okay, so level of GDP, it has impacted, it do have impacted the stock prices. As the demand has come down, people have money but do not want to make investments. So suddenly we can see in the early part of the COVID, we can find that the investment in the stocks has come down. Employment. Employment here in this case, always we say that Indian economy should have the highest possible level of the employment. But since independence from the year 1948, in each of the election agenda, we always think about that the level of employment should be maximum to its full capacity. But in none of the year, you can say we have the highest possible employment. In each of the election agenda, we have heard about the level of employment should go up. And when we have seen that India going to be the next global economy, okay, many of the theory has come that India would be, you can say, one of the reckoning force by 2020. Suddenly, you can see the people have lost the job. I have seen the growth of the people, the labor class people, you can say they have migrated from the remote places and they have come to the bigger cities. Suddenly you can see that their income level has gone up, and normally you can say they used to go in the passenger class. Suddenly they have shifted from the passenger to the sleeper and that to the AC. So that signifies that India is slowly growing up. So the courage of incurring an expenditure, which was slowly building up, it has fallen drastically. Finally, you can say the people who have gone up, they are at the same place where they had in the last 10 years. So here in this case, now the employment has come down. See, one thing is there. Unless and until we have the circulation of money in the economy, in that case, the thinking, the growth, the development of an economy does not take place. And if the development is not there, in that case, we cannot expect the level of stocks related activities to pick up. So that's why employment is one of the key aspect, and many of the business units they have to shut the business activity. Why? Because effective demand was not there. Okay, so when effective demand is not there, here in this case, we cannot expect the surge in the prices of the stock market. And when we say about the level of the inflation, and as such, you can say India was able to contain the level of the inflation, and it is always advisable to have the level of inflation up to the two digits. Okay, so as such, moment it exceeds the two digits of inflation here in this case, it is a danger to an economy. I hope many of you know that many of the African nations, you can say the level of inflation is in lakhs. Okay, it means that you have to, if you want to buy a kg of tomato, in that case, you need to pay a millions of dollars, which we cannot imagine in the Indian market. Why? Because we have the well controlled level of inflation. Many of the economy they have suspended their own currencies. Why? Because they cannot match with the global currencies. And why? Because you can say majority of the transaction is happening in the dollar. So the pegging part it happens in the dollar. So here in this case you can see inflation again it plays a key role. If the level of the inflation is high, definitely people would be spending more. If more spending is there, less money is there with them for the investment. So the inflation is again one of the macroeconomic key variable which is impacting the level of investments. Interest rates. Now when we say about the interest rates here in this case, high level of the interest rates reduces the present value of the cash flow, thus the stock's value. So the level of the interest rates do impact the stock's value. If the level of interest is high, definitely in this case, the company, the present value of the cash flow, definitely it will be less. Okay, in that case, the stocks become less and less less and less attractive. So that is why we can say that again the interest rates need to be at check. So RBI monetary policy, you can say it is always in the place, and nowadays you can see that, excuse me, nowadays you can see that RBI what they have done, they have reduced the interest rates for majority of the commodities, majority of the loans, or you can say that majority of you can see the activities. So because of which you can say people should have the less interest payment, and if people have the less interest payment, definitely they'll pump the money in the economy, and it will lead to the rise in the stock prices. Even today you can see that even for this quarter, the interest rate is unchanged. So when it is unchanged, in this case, you are actually paying less, and definitely it may boost the stock's value. The next one in this case is about the deficit budget. When we say about the deficit budget, so majority of the public spending which has been made by the government, you can say it depends on the deficit budget. Means large deficit means more borrowings, which implies the higher interest rates. So here in this case, the government spending, any kind of public spending, you can say that the government they create the deficit budget and that they utilize for the borrowing activities. So here in this case, if the given money can be utilized for development of infrastructure like the road, building, you can say societies and many more, okay, giving you can say a kind of benefit in SCZ, all these activity you can say it is well supported by the deficit financing. But there is a limit to it. If the government continues to focus on the deficit financing, the rate is bound to go up. And if the rate goes up, in that case, there would be a gap between the payment as well as the receipt, which we say it as the fiscal deficit. Only in 1 and 2 years since independence, we can see that we have the positive fiscal, you can say surplus, but remaining 99.99, you can say times, what we have seen that the government is always in expenditure, means the level of expenditure is always more in comparison to the level of the income. And the last one in this case, we have the sentiments. And when we say about the sentiments, so we have the consumer and the producer confidence. Now, this is what, out of all the factors, what I have talked about, in the given COVID situation, sentiments has played a key role in keeping the stock market clicking, and people what they have done, suddenly they have got a kind of confidence in the stock market. And one thing is there, by luck I can say that in the month of June and July, those anyone maybe an amateur investor, moment they are making an investment, you can see suddenly you can see they were making money. And few of the stocks, like if I say about the Deepak Nitrite, you can see early in the month of June, the prices of the given stock was somewhat around 280, and if you check in the current time, the prices has gone up to 900, and currently it is hovering around 810 to 850. Why it is like that? Within the span of 3 months, you can see the company has got a growth of more than 300%. Imagine if you have made an investment of 1 lakh, you can imagine your money would have multiplied by 3 times. So people here in this case, someone has made the profit, the word of mouth, the sentiments, the confidence, it has brought many amateur investors in the stock market. Why? Because they believe that they thought they do not have the business to do, they cannot do any kind of business activity, somehow they need to survive and somehow they need to kill the time. The best thing is that go with the stock market, and suddenly we can see, even though the GDP, the level of GDP is not good, the level of employment rate is not encouraging, the level of inflation even it is not encouraging, the rate has come down, the deficit financing is on the peak. Suddenly the sentiment has picked up, and this sentiment has actually kicked the stock market to its, you can say, the maximum limit. But now you can say the slowly the economy is recovering, and in the last 1 month again the stock market is behaving as per the other macroeconomic variables. So now those who have made investment in the given time in the early part of the COVID, they have made money, but they are wondering they are not able to why they are not able to make money in the given context. Now the real player in the market will survive, and again you can say the fringe player who have participated, definitely they'll leave the market. Okay, another thing which is significant here in this case in the economy is the business cycle. So I hope this have been, when we say about the business cycle, you can say it is a kind of cyclical fluctuation of the level of the business activity. Okay, so here in this case we can have the high level of, we can have the expansionary period, or we have the contraction period in the economy. When we have the when we have the expansionary period in the economy, here in this case it is being defined as the highest possible level of the business activity. So that was a situation in the last year same time, but now you can say that the economy is in the recession grip, and you can say that we have the contraction in the economy. So here in this case, you can see the level of economic activity has come down, and as such the level of economic activity has come down. So it is always advisable in the given case is that you should always think about taking your money. So the best way in this case is that you can think of the investment in the stocks, and one thing is there in the current context, if you are thinking of making a short term investment, in that case advice is that please go with the long term investment. Why? Because currently majority of the stocks it is trading at the lowest possible prices. Today news only it has been given that majority of the PSUs bank, the public sector unit banks, you can say they are now trading at the face value. So when they are trading at the face value, you can see that this is the right moment where you can pick the bank stocks. And suddenly when we see that the level of economic activity will improve, your initial investment now will definitely pick up. So this is how we pick up the fundamental cues. And whenever we have to pick the fundamental cues, so the newspaper is one of the key aspect who will give you the information. And one thing is there, majority of the investment management books or the financial management books, they say that the market is perfect, means all the information is easily available. But how you actually utilize the given information, that you need to pick up, and that will help you in selecting your stocks. Okay, so here in this case, you need to see which are the stocks in the given business cycle in the contraction period, which will help you in maximizing your gain in the long term. And some of the business in this case, they are defensive nature, whatever be the level of the economic activity, whatever be the stage of the business cycle, definitely you can see they are little sensitive to the business cycle. Why? Because they are the essential commodity. So no one is going to stop having the food. No one is going to stop buying the clothes. So minimum that is always there. You can see that because of which you can see uh, demand. Some demand will always be there. But majority of the businesses you see in the cotton industries, which is in Maharashtra, majority of the business because of the COVID, they have lost the path, and reviving those sick units, it's going to be a really, really big challenge. Okay. Now here in this case, we think about the next part in this case is about the industry analysis. So when we say about the industry analysis, so whenever I say about a firm or whenever I say about industry, there is a distinction between the firm and industry. So when I say about industry here it talks about the given sector. Example, the automobile, example, the pharma, example, the banking sector, and many more. So here in this case, you need to choose this segment. Here in this case, you need to choose the segment where you want to make an investment. Okay, and one thing is there. Each of the firm in the given industry. Industry is what? The collection of the firm. And each of the firm is an individual unit. All when we add up, it becomes an industry. So each of the firm in this case, they follow the trend of an industry. So simply you cannot make investment in the stocks in a company which you like. Some of the company from your kids, from your childhood, okay, this company, the name of the company is good. I am going to work in a given company, but you do not know the ABC of the company. With the passage of time, once you have the knowledge here in this case, selecting a firm is a difficult task. So whatever we see, first thing what we see, we need the industry where I can make investment. Currently, majority of the experts in the market they say that bank is not advisable to make investment banking segment. Why? Because for the past 1.5 months the trend is negative. Someone who would have bought at 1000, now the value is hardly 550 or 450. But one thing is there, in case of investment, your patience is very much important. So if you have the patience, definitely you can have the fruits in the long term. Okay, so here in this case, you need to identify the company on the basis of standard industry classification code. Okay, and even you can say that you can go with the value line investment survey, the report of 1700 firm in the 90 industries. Okay, and all these aspect, even say one thing is there, all the data is available as I have said in the beginning. How you are going to utilize? See, majority of the time, whenever I make the investment, I don't have the time, so I go by the economic times. I go with the key news which has been given, and from the key news, you can see I used to think of making an investment. Few days back, you can see that RIL. You can see the Mukesh Ambani group. What they have done, they have acquired the Future Group. Majority of them, you can say, they have made investment in the Future Group with the expectation that the stock prices will go up. And definitely the company Future Group, the Kishore Biani Group, you can see that now it is being acquired by RIL. Somewhat around 24,000 crore the amount has been paid. But even then you can say the Future Group prices, it has not gone up. Instead, there is a decline in that. From 150 it has come down to 89.90, and you can say that it is somewhat again it is up to, again it is somewhat it is up to, you can say, 90 only. But one thing is there, those who have made investment in the Future Group now, definitely they are going to have the benefit in the longer term. Okay, so that's why you can say we have to see the information which is available in the market, how we are going to analyze the information, and which information is going to help you in selecting of the industry, so that you'd be eligible to minimize the business risk, as well as you'd be eligible to minimize the financial risk. So whenever I say about the business risk, okay, so here in this case, when I say about the business risk, so always you can say that a business is always, you can say, one of the key aspects of the business risk is about the level of the cost, the employment of the cost. If the company is not able to manage, if the company is not able to manage their cost, definitely in this case you can see the company efficiency will come down. So here in this case, a proper distinctions between the long term, the short term cost, the fixed and the variable, and how much cost should be employed. Okay, next how we raise the fund, maybe with the help of the banks, or maybe you can say in the stocks market. So here in this case, if a company is employ more and more debts, the level of the leverages will go up. So the definitely in this case, you can say the risk element will go up. So here in this case, how a company is able to maximize the gain, maximize the efficiency, and minimizing the risk, that is one of the key aspects. So how you are going to find out? So here in this case, the ratio analysis, what you have done, the ratio analysis, what you have done, this is going to help you in analyzing the financial efficiency of the firm. Okay, and when you say about the financial leverage, here in this case it all talks about the use of the debt elements in the capital structure. So it is always advisable that one should not go with the complete debt financing, and one should not go with the equity financing, because each of them they have their own positivity and the negativity. But one thing is there, if you employ more and more debt, the level of profitability is bound to come down. Why? Because majority of your income will go towards interest payment. So whenever we make an investment here in this case, we do the ratios, we'll come to know about the level of the leverage in the firm. So we do check about the level of the risk element in the firm. If the firm level of is risk, high level of risk is there, in that case we do not think of making an investment. Another thing about the risk, we always say about the beta. Whenever we make, whenever we choose a stocks, it is always advisable to buy a stocks where the level of beta is quite less, or it should be less than one. In case if the level of beta is more than one, in that case the level of risk is maximum. Why? Because the level of movement in the fluctuations, the level of movement definitely it will be more as compared to the market movement. So it is not advisable to make investment in those high level of beta. But the recent study what we have got, that high level of beta is simultaneously providing you the highest possible return. Deepak Nitrite, I have just told you, the given company, you go and check in the Google, you will find that the beta value is quite high, somewhat around 2, but the given company in the last 3 months has given more than 300% of return. So whenever we make choose a company, whenever we make an investment, we see, am I capable of assuming the given risk? If I am capable, I am going to make investment. If I am not capable, in that case, I can go with the traditional method of investment. It means not advisable to go in the stocks. I'll be happy with my policies, maximum with the mutual fund, but beyond that, I am not able to assume the risk. And whenever we say about the company analysis here in this case, the given investors, they do evaluate the securities, they collect the information about the given company, product, services, as well as the profitability. So I was given example of the Deepak Nitrite, why this company suddenly you can say it has given a profit of 300%. I hope you might be knowing about that there is a kind of tension between India and China. So what the Indian company or what the government of India has done, any kind of chemical imports, whatever we do, suddenly you can see the level of import export duty it has been levied on that. Means they have exported to us earlier, the level of duty was less, suddenly the level of duty has gone up. We cannot simply, Indian economy cannot simply say we cannot trade with you, because India is one of the signatory member of WTO. So here in this case, to in the lieu of saving the economy, in the lieu of saving the domestic firm, government has decided to increase the levies. So suddenly you can say that the demand for the given company it has gone up. So when I was reading about the company, why the given company is becoming, and you can say it is coming in the eye of everyone, what we have seen that because of a change in the policy which has been made by the government, suddenly you can see that there is a change in the person of the company. So people here in this case, they started making investment in the Deepak fertilizers, the Deepak nitrite, and you can see that the people, the investors, they have started booking the profit. So here in this case, we have done the company analysis, and suddenly you can see the profitability has gone up. Even though when we have the severe COVID-like situation, like this, we have the DFM foods, we have majority of the stocks, they are trending downwards, but the given stocks, you can see that it has trended upward. Why? Because the given stock is a defensive stock company, means that they actually operate in the foods and the beverages. So you can see that there was the demand, And even those who have made investment in a given company, definitely you can see that they would have maximized their gain. So whenever we do the fundamental analysis here, we always think of maximizing the gain in the long term. However, when we say about a short-term gains, here in this case, suppose if you be a speculator or if you be the hedger here in this case, you are more thinking about daily price movement. And whenever you are thinking about daily price movement here in this case, you become a speculator, you think about the changes in the prices of the stocks, and because of the changes in the prices of the stocks, you are assuming the positions and you can make the investment whenever you have the favorable conditions. So that is about the short term gains. Now, this investment management, whenever we say about the fundamental analysis, a number of companies in this case, they have the reports on the website. So, my advice is that whenever we make an investment in the long term, it is always advisable to go by the fundamental analysis of the given stocks. Then we can design our portfolio, we can calculate the risk and return, and here the whole objective is all about how we can eliminate the risk and how we can maximize the gain. Do not go by the blind investment. And one thing is there, always one should make their own analysis. Do not go by any other analysis. Your analysis, if it is on the fundamental, definitely you are going to be benefited. So with the given word, I'll ask Brajesh to continue. Anyone having any kind of doubts here, please ask me. Any question is there, please
Hello.
ask me. I'll be happy to answer. Yes, sir.
If any student has got any kind of doubt, I request them to just ask it with the sir. Sir is there to clarify it. Any student has got any kind of doubt here?
No, sir.
Okay. Sir, actually presentation was damn good and it was very simple. So I think that is the reason like there is no doubt at all. So Kripa ma'am, are you there?
Yes, sir.
Yes, ma'am. Sir, thank you so much for the wonderful session today. And
Thank
we
you. Thank
we
you, the team of SCCMC. They have given me a chance to interact with all the people today. Thank you, everyone. Over to you, madam.
Thank you so much, sir. On behalf of management, I thank you for the wonderful session, sir.
Thank you, ma'am. Thank you, all the students, to be the part of the given session. I
Yes,
hope
sir.
definitely you would be benefited. Any question is there? Definitely. What I'll do, I'll put my mail ID so you can give your questions. I'll be happy to answer. So this is my mail ID. Okay. You can even put the questions on the given mail ID. Any kind of doubts, any kind of questions confining with the investment, confining with the derivatives, you can contact me, because anywhere you would be the students of me anywhere.
Thank
okay.
you, sir.
Thank you so much, sir. Kripa ma'am,
Sir.
can you give a vote of thanks for
Sir.
the whole
Sir.
program? Yes, ma'am.
Yes. I would like to thank all the students for their participation, and I thank all the resource persons for collaborating and conducting this workshop. I thank our management, principal, and HOD, and all the faculty members for the entire support to conduct this workshop successfully. Thank you, one and all. Thank you so much.
Thank you,
Thank you
ma'am.
so much, ma'am.
Thank you, ma'am.
Thank you,
Thank
ma'am.
you.
Thank you.
So we can log out, sir.
Yes, sir, we can, sir. Yes. Thank you, sir. Thank you, Kripa
Thank
ma'am, for
you.
the fantastic anchoring all the 5 days. And Thank
for
you
the
all. Yes, thank you, ma'am.
opportunity.